All right, good morning, everyone. Welcome to our morning market update for Friday, February 16th of 2018. It's George Papazov, your sometimes friendly host of the morning market updates. Today is options expiry date, so we got to start off the bat, and I want to let you know that options expiry is today. So options on ES futures, which is the S&P 500 futures, expire, and options on the S&P 500 index also expire, plus all other options that are dated for the third Friday of this month expire today. So really exciting time. There's going to be some volatility in the market. We're going to talk about options expiry and the max Payne theory and how you should trade it. All right. And I'll give you guys some tips that'll really make your trading day that much easier. But before we get to that, I want to give you guys an overnight market update. In Asia last night, Japan was up 1.2%. So really strong rally out of the Japanese markets. The Bank of Japan's minister got reelected, Shinzo Abe, and Abe was obviously a favored pick for it, and that he's actually a more dovish um, leader. So look for the Japanese yen volatility today because you're going to see a lot of it. But don't let the Japanese yen be your guiding light. But keep an eye out on the yen versus the U.S. dollar for currency traders. It's an interesting pair to follow in light of this volatility. All right, Hong Kong markets are closed. So I want to wish everybody, if you're on the YouTube broadcast, which you might not be, Kung Hei Fat Choi, Happy New Year, and to everyone celebrating it out in China. I wish you guys the best New Year. I hope you have an awesome celebration. I'm going out for New Year lunch today with some of the coworkers here in the office. And I'm going to enjoy it. So happy celebrations to you guys. Markets in China are closed, I believe, for 5 days. So this celebration is going to span out a little bit. I was looking at some crazy statistics that over 3 billion flights are going to be made over that stretch of period. And it just blew my mind to think about that. That means half the world is moving or taking some kind of a trip in the next couple of days throughout these holidays. So this is massive. This is huge. We're going to get one of the bigger trading parts of the economy to be offline during this time stretch. So overnight markets won't move as much. So keep that in mind. So those are two things you need to know. China's also closed today. Obviously, Hong Kong's closed as well. And India's down 0.8%. So overnight with the two markets that were open, two key markets, we've seen a mixed bag of nuts here. Up in Japan, down in India. In Europe, on midday, London's up 0.6%, Paris is up 0.8%, and Frankfurt's up 0.5%. So European equities were pretty strong across the board overnight, gaining about a half percentage point. This has been a very strong bullish week. We've had one hell of a rally coming out of these lows that we put in the last couple weeks. I'm going to tell you this rally is coming in on very low volume. So when a rally happens on low volume, it's not to be trusted 100%. You can't quite call this a dead cat bounce because it's bounced quite a bit. The dead cats don't bounce off the ground that high. So we're getting a little bit of bullish momentum back in the market, but it's on weak volume. And when you start to see that, it suggests retail traders are probably responsible for some of the buying the dip rhetoric. And we're going to have to look at the report that comes out on Friday for the institutional positions and how they've actually readjusted to this rally. So I get a sense just based on looking at markets and from my experience that this rally is on retail buying at this point. I don't see that there's a lot of institutional money coming in to buy the rallies or buy the dips. However, I'll tell you this much. Typically, if it is a huge bull market and we do go to new highs off of these intermittent lows that we had the last couple weeks, the volume will be weak at the start because the big money is still waiting to make their decision. So a lot of this money being on the sideline from institutional traders could mean two things. Number one, they're waiting for a good opportunity to hit this thing one more time and really sell it down once again. Or number two, they're just waiting patiently to start buying. And if it's the second one, then you actually have a lot of cash waiting to buy, and we can track back all the way to the highs. It's not it's not out of the context of things. It is a bullish market after all. There are a few things in the undertone that are changing. Bond yields are really high, US dollar crashing, that are making institutional investors and traders really nervous. So we're going to see decision heights coming up soon. In the futures here in the United States, Dow Jones is up 1/10 of a percentage point. S&P is also up 1/10 of a percentage point. NASDAQ's up 1/10 also, so all across the board 1/10. Crude oil is up 0.2%, and gold futures are up 0.4 in today's session. Bitcoin is down 3%. It's having a hard time breaking above the 10,000 handle once again, so 10,000 would be really strong resistance on the upside. It was a strong support on the way down on Bitcoin. Now it's going to test as resistance. If we do manage to get above 10,000, look for some more buying to start jumping in. Keep an eye out on volume. That's your telltale sign of what the smart money is thinking. Yesterday, there was one wallet account. So on Bitcoin, all the wallets are actually public. If you know the wallet number, you can see what kind of balance they have. And there was a trader that put in a $400 million order to get long Bitcoin. They bought it to the tune of something 4,000 Bitcoins in yesterday's market. That's a pretty huge and significant transaction. That makes that wallet the third biggest in all of Bitcoin. So somebody just increased their position to the third biggest position in the entire world into this Bitcoin trade. You're starting to see some big money get into this dip. So Bitcoin could be at temporary support. If we break above 10,000, we could be headed up to the next resistance level. You guys stay tuned for that. All right. Housing starts this morning came out at 1.4 million versus 1.29 million expected. So a really strong beat on housing starts in the United States. Retail sales month to month came out at 0.1% versus 0.5%, a little bit weaker than expected. All right, for the rest of the day at 10 a.m., right after the open, the first 30 minutes at the top of the hour, we have consumer sentiment. That's an important indication. 80% of the United States' GDP is driven by consumption. So consumer sentiment is a very important future indicator. It's a leading indicator of sorts, if there is that. All right, and then we have e-commerce retail sales at 10 a.m. as well. And at 1 p.m., we have the Baker Hughes rig count. And that's going to show us how much oil the United States has output. And that's an important indication. All right, here's some cool stats for you before we get into the options max Payne theory. The S&P 500 and Dow Jones have rallied for 5 consecutive sessions since falling into the correction territory last week. What is a correction? It's a 10% drop from highs. So we did get a correction sell in the last couple weeks, took us 10% lower, but we've recovered 5 straight sessions in a row. Again, all on weak volume. However, both indexes up 4% and on track for their biggest weekly percentage rise since November of 2016. So the bulls are making a comeback. Don't discount them yet. The NASDAQ is up over 5%, and that's its best week since October of 2014. So here's how I'm going to recap this. Equities are making a comeback. It's options expiry today, so look for a lot of volatility. Equities are making a rally. It's on weak volume, but NASDAQ's leading the way. 2 areas of concern are rising bond yields on the 10-year Treasury note in the United States and this weak U.S. dollar, which is also rebounding temporarily today. I think today you go in without having a sentiment in today's session as a day trader, and you wait to see where momentum's at to take direction. Let's talk about options expiry because this is important. In options trading, there's a thing called max Payne theory, and the theory suggests the following. It says that the level at which there's the most amount of options is where we're going to close below. So I'll give you an example. Let me explain a little bit better. Said differently in one sentence, the stock market price will expire at the level that will cause the maximum amount of financial loss in options markets for the maximum amount of participants. Now, the beauty about this is you could use this for your trading as a support and resistance. How do you do it? You pull up the options statistics, you look at how much open interest there is across different strike prices, and you find out where the majority of puts are and the majority of calls are, and that's your support and resistance for the day. I'm going to do that with our trade pros in the room, our subscribers. I'm going to turn around in a moment. That's the first thing we're going to look at and map out those levels because those levels are going to be gold for today's price action. Whenever you have an options expiry series, that's what you want to look for. You heard it here first. So look out for options expiry. There's going to be some volatility today across all markets. And I'll tell you this much. Typically, options expiries are slightly skewed to the bullish side. We'll rally up throughout that session. So watch for that. You guys take care. Trade carefully today. Have your stop losses placed in. Manage your risk, and that's how you're going to get paid. Expect volatility. Expect to see trades that look amazing. You get in them, and you get stopped out. Today's session in particular, Fridays, on an option expiry, statistically for me, have been the lowest win percentages. So knowing that, I'm going to scale down the trade size that I'm doing personally. If you have good run with options expiry, you could increase your scale size, increase the trade size with your confidence, and you're going to do well in this market. So today I'm going to decrease a little bit of lot size and decrease some of the frequency of trades and take advantage of it. With options expiry, you can expect to see the unexpected sometimes. So I'll preface it with that and leave it off on that note. So happy trading, guys. Manage your risk. Watch for the options expiry series. Watch for the strike price with the most amount of open interest. Use that as your guiding light today. Trade careful. It's the last day of the week, and we're capping off a really bullish week. I wouldn't be surprised to see a nice upside day today, something to the tune of 20 to 30 points on the S&P 500. I also wouldn't be surprised if it dropped 20 to 30 handles And I'd be the least surprised if it stayed in a 10 handle range all day. One last point I want to bring up to you, by the way, about this options expiry. Options expiry gets a little more volatile as you approach the close because your window of opportunity is closing, right? Think about it. The market opens at 9:30, closes at 4 p.m. If you have some options that are close to the price of the market, you have time to adjust your trades and close out your options. But as that time narrows, you got less and less time and you have to take action. So from 2 p.m. to 4 p.m. Eastern this afternoon is going to be the most volatile periods due to option expiry. So you guys trade careful. I'll see you guys tomorrow. Have a happy Thursday, or have a happy weekend, rather. It's Friday. Have a happy weekend. I'll see you guys on Monday morning. I got 2 great videos coming out for you on YouTube Saturday and Sunday at 1 p.m. Eastern. So stay tuned. You guys take care. All the best. Have a wonderful weekend and enjoy your time with your family, friends, and loved ones. I'll see you on Monday. Take care. All right, trade pros, let's look at these options levels. I think they're going to be very helpful for us today in terms of determining whether there's going to be some support